Hello everyone, today's video should be nice and sweet, simple, to the point. We're going to talk about the S&P 500, the NASDAQ, the Russell, the dollar, what the next steps are for the market. We're going to take a look at what happened with Apple and the event that they had today, and we're going to put it all together, talk about what the next steps are for the market. All right, so without further ado, let's get started with the video. All right, so Apple had its event, and they basically released information about the iPhone 15, new Apple Watch, and updates on the AirPods. So what they said was the company announced the iPhone 15 and iPhone 15 Plus are going to be starting at $799, and the iPhone Pro Max is going to be starting at $999. So that's obviously cheaper than the prices of the phones now, if I'm not mistaken. So that is interesting that they're doing that, right? AirPods in and of themselves are like a phenomenal cash flow for Apple as well. And intraday, Apple held the 175 level support, very, very important support it held. And there were a lot of option buyers and a lot of options put sellers at 175. So that 175 area was a magnet. It held really, really well. And but by no means is this a bullish setup, but Apple held 175. And the news, the event didn't really spike the price up, nor did it, it just followed the trend of the overall market. But it was by no means super bullish. All right, so that's that for Apple. All right, so this is the CME Fed Watch tool. And when you scroll down, you will see the percentage chance of target rate probabilities for this Fed meeting on September 20th. So, and we have CPI data being released tomorrow morning. And obviously we're not swinging anything dramatic overnight, because this is very risky to hold on to something overnight through the morning. So obviously we have the Fed rate meeting on the 20th. So given the fact that we're going to be getting CPI data tomorrow, they're basically accounting for a 93% chance that there's going to be no change in the current Fed rate. So we have to see if that is going to be the case and whether this percentage changes or not after CPI data gets released tomorrow. So that's going to be really interesting, and we're going to have to monitor how that goes. So now when we look at the day-to-day trading setups for the indices, right? So number one, yesterday I was talking about how Amazon, Tesla, these large tech stocks that had a big move were either overextended or needed to have like a day of stagnation where they would consolidate a bit. That consolidation and the weakness thereafter basically caused the overall market to also show some weakness. So that was number one. And number two, we were looking at the dollar. So I was also mentioning how basically the dollar, so number one, the dollar is relevant because it has an inverse relationship to the market. And I was showing how the dollar was getting close to a level of support. And if the dollar failed to continue falling lower through support, that would be bullish for the dollar. And if it's bullish for the dollar, then that is bearish for the overall market. So today, obviously, we bounced off of this level of support and we failed to continue falling lower, which is bullish for the dollar. And that's another reason why the overall market fell. So the tech stocks being pulled down and also the dollar bouncing helped cause the market to fall. That coupled with, I think, the indecision in terms of CPI data being released tomorrow. So that is basically the issue there, right? And then the third reason was that we came to major levels of resistance yesterday. So we came to major levels of resistance on the indices. The tech stocks were showing extreme strength, and the dollar was basically holding support. So a lot of these things were not bullish for the stock market. These were not bullish setups for the stock market. And I was trying to explain, like, earlier in the day, I couldn't make the trade setup video, but we went short, and because we failed to really show strength here at this 448, 449 level, we leaned short early on in the morning. And then I told everyone, it's really, really, like, we were looking at this very important fib level here, the 50% fib level here at 446.23. I was saying it was very, very unlikely that this was going to be a good level of support, and I would not be leaning long. I would rather be leaning short. And yeah, like, we basically fell towards the end of the day. We had a big spike to prior levels of resistance at 448 and 448.50, but that did not sustain itself. Like, so very, very simply, when we just take a look at this on a daily time frame. Okay, so on a daily time frame, we know that 448 and 448.50, on a 1 minute time frame, this is the SPY. We know that 448 and 448.50 are major levels of resistance. Fine, right? So what we did, all right, so now let's just look at the dynamic, the mentality of the market for the day. We bounced off of the 446 level. Okay, we fell early morning. We went short. This worked. We fell, blah, 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 right? Then we bounced off of this important fib level. Okay, things looked good. Wow. Okay, whoa, wow, things look great. Wow, this whole move to the upside, not sustainable. When you zoom in on this is not a sustainable move. We are moving in a complete disgusting uptrend. Not sustainable. Not sustainable at all. That's why we had this big move to the downside afterward. So from here, cool. It looked like it should have just continued falling lower. But instead, what ended up happening was they did not want to make it that easy for people to follow the short. What they did was they held it up, and then they had a big rip to the upside. Now, in terms of trading, like I said, in terms of trading is a numbers game. You have to continue taking shots at high quality setups. What do you do after, number one, we bounce off of an important level of support? We are basically held up in the sky here with this setup here. And then number three, big spike up to a major level of resistance at 448.50 and at 448. What do you do here? Do you go long again? No, you do not go long. This is a beautiful, amazing opportunity to go short. And all you needed to do as we spiked up here was just go short with a stop loss at this candle, and you would have been good to go, because this spike to the upside was a huge bull trap, and you just can't fight. You cannot fight the overall momentum of the market. Once we hit, so obviously, it just continued falling afterward. But my point is that once you hit a major daily level of resistance here, and it stagnates, right? And we fail to break above, then the upward momentum it's tough to continue. Okay, so you can't just automatically lean long into every trade, especially after resistance. You failed that resistance. So now, we stayed on the right side of the market today. It was pretty good. Now tomorrow, there's going to be a lot of indecision in terms of where the market is going to go post CPI. So we're going to have to see how that plays out tomorrow morning. Hopefully that should bring some good trading opportunities. But it was just, I hope I did a good job explaining why I was not bullish, why I was not exuberant to be long. The tech stocks needed to take a dip. The dollar was at support, and the S&P was at levels of resistance. So, yeah, this was a great day to just lean short. Tomorrow we have to play it depending on how CPI data gets released. But aside from that, the NASDAQ obviously was also failed at 375, and the IWM still holding support. What's interesting, what's really interesting actually, is Goldman Sachs had a big green candle. So this begs the question if they got the CPI data early or what this was about. But Goldman Sachs, which is obviously a bank, a value stock, they get affected by interest rates, obviously. So it's interesting, in my opinion, that Goldman Sachs had a bit of a spike upwards. So yeah, let's see how that turns out. And obviously not just Goldman Sachs, but you know, the rest of the financial sector and other banks as well. But it was led by Goldman from what I saw. So pretty interesting stuff. And I'm interested to see how CPI data gets released tomorrow. And hopefully don't have another brain fart in my explanation for everything. So yeah, regardless, I hope you guys enjoyed. I hope all of this makes sense. And yeah, you know, we just have to take it one day at a time now. Now things are gonna start clearing up. The smoke will start subsiding, hopefully, and we'll get some better clarification tomorrow into the day. All right, so yeah, love you guys. Have a good one. And yeah, take care. Have a good one. See you guys bright and early tomorrow morning.